Are car prices about to crash? The short answer? It's looking very likely. We're seeing a ton of indicators pointing towards a massive drop in used car prices, potentially as much as 50%. Now, before you run out and buy the first cheap car you see, there's a lot more to this story. We're going to break down exactly why this is happening, what to expect, and most importantly, how you can come out on top. Whether you're looking to buy a new car, sell your old one, or just want to understand the market better, this video is for you. So, stick around, your wallet will thank you. The used car market is a wild ride. It's been through a lot. At the end of this video, you'll have a solid grasp on the forces during the pandemic, leaving many people priced out of the market. But what goes up must come down, right? That's the million-dollar question. And to answer it, we need to look at the bigger picture. We'll be exploring the historical trends that have shaped the used car market, from World War II production pauses to the recent chip shortage. Understanding these past events can give us valuable clues about where the market might be heading. By the end of this video, you'll have a solid grasp on the forces at play and be better equipped to navigate the used car market like a pro. Knowing when to buy or sell a car can save you thousands of knowledge into action and coming out ahead. So the clock is ticking. We'll equip you with the knowledge you need to make smart, informed decisions about your next car purchase or sale. Whether you're looking for a steal of a deal or want to get the most value out of your current vehicle, this information is crucial. We'll be sharing insider tips and strategies to help you navigate the potential car price crash with confidence. This isn't just about understanding the market, it's about putting that knowledge into action and coming out ahead. So stay tuned, because we're about to dive deep into the factors driving this predicted price crash and what it means for you. To understand where the car market is heading, we need to look back to context for understanding the current market dynamics itself, and the car market is no exception. From world wars to economic recessions, several events have shaped the automotive landscape we see today. By understanding these past trends, we can gain valuable insights into the factors that might trigger a car price crash in the near future. We'll be examining key historical events that have disrupted car production and influenced prices. These events provide a crucial context for understanding the current market dynamics and predicting what might be in store for car buyers and sellers. So buckle up as we take a trip down memory lane to uncover the historical forces that are still shaping the car market today. World War II had a profound impact on the automotive industry. It also underscores the delicate balance between effort, churning out tanks, jeeps, and other military vehicles instead of consumer cars. This wartime production halt created a pent-up demand for cars that lasted well into the post-war years. When car production resumed, it couldn't keep up with the surge in demand, leading to long wait lists and inflated prices. This period highlights how disruptions in car production can have a ripple effect on prices, even years later. It also underscores the delicate balance between supply and demand in the automotive market. The lessons learned from this era are still relevant today. While we're not facing a world war, events like the recent pandemic have caused similar disruptions in the supply chain, leading to production delays and price hikes. The COVID-19 pandemic brought the global economy to its knees, including the automotive industry. Lockdowns led to a massive shortage of semiconductor chips, crucial for modern cars. This bottleneck caused inventories to dwindle and prices to skyrocket. Buyers flooded the used car market, driving up prices. The pandemic highlighted the vulnerability of global supply chains. While the pandemic undoubtedly impacted car production, interplay of factors that can influence car prices by intentionally creating artificial shortages to boost profits. The theory is that by limiting the supply of new cars, automakers could charge higher prices, knowing that desperate buyers would be willing to pay a premium. This alleged manipulation of the market has sparked controversy and fueled suspicions about the true reasons behind the recent price surge. Whether or not these accusations hold weight, they highlight the complex interplay of factors that can influence car prices. It's a reminder that market forces are not always driven by pure supply and demand, but can be influenced by corporate strategies and external pressures. Understanding these nuances is essential for consumers and industry experts alike. As we delve deeper into the current market dynamics, we'll explore whether these accusations of artificial scarcity hold water and how they might be shaping the predicted price crash. The COVID-19 pandemic didn't just impact our health, it sent shockwaves through the global economy, and the used car market was caught in the crosshairs. Between June 2020 and June 2021, used car prices skyrocketed by 45%. The average used car price went from $20,697 to $27,583. Factory shutdowns choked off the supply of new cars, while people, flush with stimulus checks, flooded the used car market. The recent pandemic price surge wasn't the first time the used car market went haywire. History is littered with examples of wild price swings. One such example is the oil crisis of the 1970s. When OPEC imposed an oil embargo, gas prices soared. Fuel-efficient cars were in high demand while gas guzzlers plummeted. External factors like pandemics or geopolitical events can disrupt this balance. The 1970s oil crisis turned the used car market on its head. Before the crisis, large American cars ruled the road. But when gas prices quadrupled, demand for them plummeted. Used car lots overflowed with unsold Buicks and Cadillacs. Smaller, fuel-efficient Japanese and European cars became hot commodities. Used Honda Civics and Volkswagen Rabbits commanded top dollar. Owners sold their used cars for almost as much as they paid new. The oil crisis showed the used car market's dynamic nature. The Great Recession of 2008 brought chaos to the used car market. Demand for cars plummeted, and the market was flooded with inventory. Prices dropped, but it was a buyer's market only if you had the cash. The Cash for Clunkers program in 2009 aimed to stimulate the auto industry. It took millions of used cars off the road, shrinking supply. This led to a rebound in used car prices, making it more expensive for buyers. The Great Recession and Cash for Clunkers highlight the delicate balance of supply and demand. Remember those crazy days of pandemic car prices? Yeah, those days are fading into the rearview mirror. The used car market, after reaching a fever pitch in 2022, has begun to shift gears. Like a car hitting a patch of gravel, prices are starting to level out. We've started to see a gradual decline in used car values. The new car market, once a ghost town, is showing signs of life again. Automakers are churning out new models, rebuilding inventories. This resurgence is affecting the used car market, tempting buyers. The allure of a new car smell and warranty is powerful. This shift is putting downward pressure on used car prices. As production ramps up, expect this trend to continue. Data from March 2024 reveals that the average used car price has dipped to $28,345, a notable decrease from its peak in 2022. Think of it like cresting a hill on a roller coaster. The used car market seems to have reached its peak, and the downward trend is undeniable. Inflation and interest rates are playing a significant role in the predicted car price crash. Inflation is starting to sputter, and interest rates are on the rise. This combination is putting a damper on consumer spending, making it more expensive to finance a car purchase. As inflation cools and interest rates rise, this trend will continue. Remember that ripple effect we talked about? It's about to make a cars increases, the demand for used cars decreases. Car production rebounds, we're seeing downward pressure on new car prices. Automakers are offering incentives and discounts, making new models more tempting. As new car prices become more attractive, the demand for used cars takes a hit. Why pay a premium for a used car when you can get a new one for a similar price? This shift in consumer behavior is a key driver behind the predicted used car price crash. As the supply of new cars increases, the demand for used cars decreases. This creates a buyer's market, giving consumers more leverage to negotiate better deals. Understanding how new and used car markets impact each other is crucial for predicting price trends. Timing your purchase can make a significant difference in the price you pay. The cost of building a car isn't just about labor and design, it's also influenced by raw material prices, like steel and aluminum. Those prices have been on a downward trend lately. This might sound good for car buyers, but it can contribute to a dip in used car values. Cheaper raw materials mean lower used car values. Understanding these factors can help you make informed decisions. Inflation and interest rates are also at play in pressure on prices. Buyers might delay purchases or low interest rates, making car financing affordable. But those days might be numbered. As inflation cools, central banks raise interest rates to keep the economy in check. When interest rates rise, so do the costs of borrowing money, including car loans. This can make financing a car more expensive, deterring some buyers. This cooling effect on consumer spending can decrease demand for used cars, putting downward pressure on prices. Buyers might delay purchases or opt for more affordable options. Understanding inflation and interest rates is crucial for navigating the car market. These fluctuations are a normal part of a healthy economy. Remember the shortage of used cars during the pandemic? The right moment can make a significant difference in the price you pay. Used car market could soon be flooded with inventory. This influx could create an imbalance between supply and demand, favoring buyers. With more cars available than buyers, prices might drop to stay competitive. This potential glut is a significant factor driving the predicted price crash. More options give buyers greater leverage to negotiate lower prices. Timing in the car market is crucial. Waiting for the right moment can make a significant difference in the price you pay. The confidence factor, consumer sentiment, and the future crash. When buyers are unsure about the future, psychology as it is about numbers. Consumer confidence plays a crucial role in driving purchasing decisions. Right now, consumer confidence in the car market is shaky. The lingering effects of the pandemic and concerns about inflation have left some consumers uncertain. This uncertainty can translate into hesitancy to make big-ticket purchases like cars. This dip in consumer confidence could contribute to the predicted price crash. When buyers are unsure about the future, they're less likely to make impulsive purchases. Understanding psychological factors in the car market is as important as analyzing economic indicators. Consumer sentiment can shift quickly, impacting car prices and sales. The coming price drop. How low will used car go? We're heading into a buyer's market. Experts predict a significant drop in used car prices, potentially as much as 20 to 50%. The used car market is influenced by economic factors, consumer behavior, and global events. Declining new car prices, falling raw material costs, and a potential glut of used cars point towards a significant price correction. The extent of this drop will vary depending on the make, model, age, and condition of the vehicle. We're heading into a buyer's market. This presents a unique opportunity for those priced out of the used car market in recent years. If you're patient and strategic, you could snag a used car at a fraction of last year's cost. Burst of the bubble. Is the used car market heading to an environment ripe for a correction? A correction has led many analysts to whisper the word bubble. A bubble is a rapid escalation in asset prices driven by speculative demand. The unprecedented price increases, fueled by pandemic-related disruptions, have created a market where used cars sometimes sell for more than their original MSRP. This disconnect between price and value is a hallmark of a bubble. When prices are driven by speculation, it creates an environment ripe for a correction. A correction refers to a significant decline in prices as the market self-adjusts. This correction can happen gradually or suddenly. Understanding these market dynamics can help you navigate the car market. Navigating the terrain. What the predicted crash value? Depreciation is a normal part of car price crash mean for you. If you're in the market for a used car, this could be your lucky break. The coming months could present an opportunity to snag a great deal. However, be patient and strategic. Don't rush into a purchase just because prices are dropping. Take your time, do your research, and be prepared to negotiate. If you're a current car owner, you might be anxious about your car's value. A price crash could decrease your car's resale value. Depreciation is a normal part of car ownership. Stay informed about market trends and make informed decisions about when to sell or trade in your vehicle. If you're not in a rush to sell, you might want to wait out the price correction. The predicted used car price crash is a reminder that markets are cyclical. Buyer's market advantage. Tips for snagging. The perfect car at the right price might take some digging. Crash is like a clearance sale on 4 wheels. To snag the best deals, you need to be a savvy shopper. Knowledge is power in the used car market. Identify the make and model that suits your needs and budget. Use websites like Kelley Blue Book and Edmunds to compare prices. Once you've narrowed down your options, start shopping around. Explore online marketplaces, classified ads, and local auctions. Cast a wide net and be patient. The perfect car at the right price might take some digging. A buyer's market gives you leverage. Don't be afraid to haggle and make counteroffers. A little negotiation can go a long way in maximizing your savings. The value of patience, timing your purchase in a volatile feasible. If you can afford to be patient, delaying your The predicted price crash is enticing, but don't rush into a purchase. Patience could save you a significant amount of money. Resist the urge to jump on the first deal that seems too good to be true. The market is still adjusting, and prices could continue to decline. Keep an eye on market trends and track prices for the vehicles you're interested in. Consider your individual circumstances. If you desperately need a car, waiting might not be feasible. If you can afford to be patient, delaying your purchase could pay off. Buying a car is a significant financial decision. Don't let the excitement of a potential deal cloud your judgment. Take your time, weigh your options, and make a decision that aligns with your financial goals. The art of the deal negotiation strategies for a seller, but start with a lower price. Justify your shifts to the buyer. This means you have more leverage to negotiate a favorable price. Negotiation is an art form. Be prepared, confident, and willing to walk away. Arm yourself with information before contacting a seller. Know the fair market value of the car you're interested in. Use websites like Kelley Blue Book and Edmunds for pricing insights. When making an offer, be realistic but firm. Don't lowball the seller, but start with a lower price. Justify your offer based on research and market conditions. Negotiation is a two-way street. Be respectful but stand your ground. If you're not comfortable with the terms, be prepared to walk away. There's always another deal around the corner. Mastering negotiation can help you secure the best deal. Weathering the storm strategies for used car businesses as low mileage, excellent condition, and service history, and opportunities for businesses. Adapting to changing conditions is crucial for weathering the storm. Acknowledge the changing market dynamics. Transparency and flexibility are key to maintaining customer trust. Adjust pricing strategies to reflect the new market reality. Lower prices, offer incentives, or explore creative financing options. Highlight the value proposition of your vehicles. Emphasize low mileage, excellent condition, and service history. Building trust with customers is more important than ever. Diversify inventory to cater to a wider range of budgets. Offer a mix of vehicle types, ages, and price points. The predicted price crash is not a death knell for businesses. It's a call to adapt, innovate, and prioritize customer value. Embrace transparency, adjust strategies, and focus on building trust. Navigate the challenges and emerge stronger in the long run. The road ahead, navigating the shifting landscape of the used car market. The used car market is on the cusp of a significant shift. Armed with the knowledge we've shared, you're better equipped to navigate the twists and turns. The current market conditions suggest that a period of adjustment is on the horizon. Section 2, the knowledge advantage. Empower. Don't let the excitement of a potential deal cloud goes is power. And in the world of used cars, that power lies in understanding market trends, pricing dynamics, and negotiation strategies. By empowering yourself with information, you can approach the used car market with confidence, whether you're buying your dream car or selling your current ride. Remember the key takeaways. Patience is paramount. Research is your best friend, and negotiation is an art form worth mastering. Don't let the excitement of a potential deal cloud your judgment, and always be prepared to walk away if the terms aren't right for you. The used car market might seem daunting, but it's not an insurmountable challenge. By staying informed, being strategic, and trusting your instincts, you can navigate this dynamic landscape and come out ahead. Stay connected. Subscribe for more insights and updates. The used car market is constantly evolving. Subscribe for insights, updates, and in-depth analyses, empowering car buyers and sellers with knowledge. Hit like and share with friends navigating the used car market. Stay tuned for more insights, and happy driving.